Mr. President.
Senator from Oklahoma.
Mr. President, let me tell you about Farmers State Bank of Allen, Oklahoma. Then I know exactly where Allen, Oklahoma is, but I bet a bunch of folks in this room do not. It's a small town, small bank, $43 million in total assets in that bank. That's a pretty small bank as banks go. It's located in a town of about 900 Oklahomans total. The town has a number of small business owners, farmers, ranchers, folks that some people in this room fly over. But they're good families that live in that great town. Many of them have great credit scores and have a good family history of repayment back to the bank when they've taken loans, because that's the bank in town. They've been longtime customers of this bank. And in many instances, the bank employees and the people in the bank have grown up together. They know each other, but they also understand seasonal income. When you're a farmer and rancher, it doesn't come in with a W-2 every single week or every month. It comes in seasonally, so they understand the credit restrictions there. A banker named Debbie, the Farmers State Bank of Allen, wrote me this and said, between the ability to repay and the global cash flow analysis, particularly for a bank of this size, the rules are taking our time away from doing what needs to be done, caring for our customers. We have 12 employees. We're treated the same as JP Morgan Chase or Goldman Sachs, both of which have an entirely different business model of operating. They don't operate in towns of 900 people. That's not their business model. That's not their market. One of our key employees now spends most of her time on compliance issues. Total cost for this employee, with the cost of the compliance audit and everything that goes with it, is $100,000 annually. Now again, folks in big towns may not think that's a big issue to have $100,000 in compliance costs, but the total net income of this bank total for the year is right at $500,000 a year. $100,000 of it is now spent on compliance. How did this happen? Well, this happened when Congress decided in 2010 to pass something called Dodd-Frank. Dodd-Frank was a bill signed into law in July of 2010 to deal with the financial crisis that happened in 2007 and 8, which was real. And the largest banks in our country took some incredible risks, and it caused a financial domino effect all over the country. And it caused great risk for our international markets. And in response to that, Congress rose up with a strong Democrat majority, and President Obama ran to it and said we need to do something, and they looped together as many different financial restrictions as they could. They created a new thing called the Consumer Financial Protection Bureau with no oversight at all. They created a whole litany of new regulations and said this will only be for the biggest banks because they were the violators, put it on out there, and then the regulations started flowing after that. And guess what? Farmers State Bank of Allen, who was not the cause of the financial collapse in America, is now caught up. And they're struggling to survive as a bank. Because Congress decided they were going to do something, the something ended up being something that is devastating rural economies in my state. Since the passage of Dodd-Frank, we've seen a 16% decline in the total number of Oklahoma bank charters, just in my state. There's a 35% decline in Oklahoma chartered banks with less than $100 million in total assets since Dodd-Frank. The effects of Dodd-Frank were felt pretty quickly, actually, in Oklahoma. Passed in 2010, by the 2013-2014 reporting time, more than 40% of the banks in Oklahoma no longer did mortgage lending at all. Now let that soak in for a minute. Banks that don't do mortgages. If you're in a rural community, that is the bread and butter of normal lending in that community, is going to get a mortgage. But 40% of the banks in Oklahoma, starting by 2013-2014 reporting cycle, just 3 or 4 years after Dodd-Frank passed, had already said the compliance costs were so high and the complexity was so great, they no longer offered mortgages and mortgage lending. Well, folks would say, well, just drive to a big city and go to a big bank and get it. They'll still take care of that. Quite frankly, that's what's happening. Dodd-Frank has done an excellent job of increasing the size and power and strength of the biggest banks in America and targeting the smallest banks in America. We're watching mergers all over my state as the smallest banks struggle under the compliance cost. It almost looks like the design of Dodd-Frank was to cause biggest banks to get bigger because the smallest banks would not be able to survive under the compliance burdens that were then created for them. What does that look like in real life? Let me just tell you, a gentleman that I bumped into Monday morning early. I was flying out of Oklahoma, and I'm sitting next to a gentleman, and we're just striking up a conversation. He's a rancher, farmer and rancher in Oklahoma, and he owns about 200 acres in north central Oklahoma. He started to go through the purchase process to actually buy that acreage and couldn't get mortgage lending for it. No banks in the area would do it. Why? The Dodd-Frank requirements. So suddenly a guy in Oklahoma trying to buy 200 acres had to find a way to be able to scrape together $100,000 of cash to be able to go buy a ranch. Now, 5 years ago, 10 years ago, 15 years ago, if you wanted to be able to get that same ranch, you would go to the bank in town. Now the bank in town has to tell you, you've got to go somewhere else or find some other way to do it because the restrictions are so high, we can't do it anymore. Local customers don't want to deal with someone else in another state or in another city. They'd like to deal with their local bank, but they can't anymore. Oklahoma's community banks had nothing to do with the financial collapse in 2008, yet they've been penalized all the way through this process. In total, Dodd-Frank required more than 10 federal agencies to write more than 400 new rules, imposing 27,000 new mandates on financial institutions of every size. Just process that. When you're Farmers State Bank of Allen and you have 12 employees, you've now got to track 27,000 new mandates on you to be able to keep up with it. How you doing with that? That's what real life looks like. Again, I've had folks say to me, this is some giveaway to the biggest banks. What we're dealing with in this reform package is pretty straightforward. Wall Street Journal wrote an editorial earlier this week saying the bill eases administrative burdens on 5,000 community banks that make up 98% of the financial institutions, but only 15% of the assets. Let me run that past you again. What we're dealing with deals with 98% of the banks, but of total banking assets in the country, only 15% of the assets. That means the top 2% of the banks in the country, the largest top 2% of the banks in the country, have 85% of the assets. I understand the higher regulations on those. They are significant, and if they fail, they take down global economy. But for the other 98% of the banks in the country that have only 15% of the total assets in the country, these are the smallest banks in the country, why are they being drugged into this? All we want to be able to do is to say, allow local banks to be local banks again, to be able to loan to their neighbors. These are the folks they go to church with, they're in Rotary Club with, they've grown up with, they know their kids, they know their families, but they're dealing with all these arcane requirements, and they're dealing with all these 27,000 new rules, and they just can't make it. What does this look like in real life? Let me give you an illustration from Elk City, from Legacy Bank. Damon from Legacy Bank in Elk City, Oklahoma, said, as a community banker, my job has become much more difficult and burdensome to our customers. Legacy has always strived to offer the best customer service a bank can offer. I used to be a lender to all. However, with the changes that have come about in the Dodd-Frank bill, along with the fines and penalties that are potential and at times don't make common sense, I am now a commercial lender only. Let that soak in for a second. At Legacy Bank in Elk City, he used to make loans to everyone, and now he's a commercial lender only. What does that look like in real life? I have folks that come to this floor and people that catch me and say, banks are still making lots of money. Banks are doing just fine. Why is Dodd-Frank a problem? Yeah, Banks are going to find a way to still do business, but what's happened? The biggest banks are loaning to corporate customers, and the smallest banks that used to do small business lending and do mortgages and take care of their community can't do it anymore. So the big is getting bigger and helping the biggest, and the small are not able to help small. I thought we were supposed to be a country that helped everyone. Corporations or individual farmers and ranchers and citizens trying to start a small business. Let's get back to doing that again. Let's not put 27,000 new restrictions on a small community bank and to tell them they've got to abide by everything that J.P. Morgan Chase does and treat them as if they're the same. They're not. Fraser Bank from Altus, which my wife and I have a long-standing saying. Everywhere you go in the world, you're going to bump into somebody from Altus, Oklahoma. Try it sometime. This past week, she wrote, this past week in Altus, we had a local small business owner that applied for a home mortgage loan. The customer had a down payment and closing cost, but one of the key issues preventing our bank from making this personal loan was the time constraint of 2 years of history. This is someone that we would have made a home loan to prior to Dodd-Frank, but now we cannot. So a small business owner with closing cost money, with ability to repay, is now blocked out. How serious is that? Jim Hamby from Vision Bank in Ada wrote me and was trying to describe exactly what this looks like. He made the statement, overly prescriptive rules on mortgage lending are the big issue. The ability to repay and the rules governing that topic are geared for people who are W-2 wage earners, not the small business person. Many small business people have already been denied credit who would have otherwise qualified for a mortgage, and that's bad policy. Any mortgage bank keeps its own books and should automatically define as a qualified mortgage. This would help alleviate the ability to repay rule and allow us to take better care of our customers. Don't miss what he's saying there. The rules are written for people who get a paycheck from week to week, not for the small business owner, and certainly not for the farmers and ranchers. Here's a statement from a banker in Northwest Oklahoma. Said, asked the simple question, what about a $60 million bank in the northwest corner of Oklahoma? What about other rural markets where smaller traditional community banks have completely abandoned lines of business and product because of the cost of regulation makes it so unprofitable, or because of the price of regulation and risk from examiners and lawyers brings so much additional scrutiny you can't afford it? One thing is certain. When banks are forced to leave lines of business due to government regulation, both customers and communities suffer. Even in markets where there are other participants in the abandoned product line, the reality is with fewer competitors, customers pay higher rates, higher fees for simple service. This is not a hard issue. For those 2% of the largest banks that have 85% of the banking assets, I understand there's systemic risk there. For the other 98% of the banks in the country that cover 15% total of all the banking assets in the country, why are they considered so systemically important that 27,000 new regulations would need to come down on their 12 employees? This is a good moment to be able to get small towns in rural America working again and allow people to be able to go down the street to the banker they know and went to school with, rather than have to drive into some big city and talk to the biggest banks in America and have them try to understand more about rural America. We can fix this. I'm looking forward to passing this reform and allowing our banks not just to make money, they'll find a way to be able to make money. They're a business, but to actually getting back to serving the customers they want to serve in farms and ranch and small businesses again in a fair way. With that, Mr. President, I yield the floor.